Hello nieces, hello nephews, it's your Uncle Charters here, and welcome back to my YouTube channel. Now, the market got some tricky price action ahead, but no matter what, Uncle Charters is always gonna give you that unbiased technical analysis. So if that sounds good, please hit that like button, hit the subscribe button, and turn on the notification. Now, we're gonna start it off with the options flow, and once again, it's bearish. 91% in the puts, 9% in the calls. Filtered for 500K premiums or above. Seeing a lot of big money betting to the downside coming in for that August 19th date. So last month, we saw a lot of July 15th out the money, big money puts. Now we're seeing it for August 19th. All right. Still not July 15th yet. So we'll see what is going to happen as we get closer to that date. But overall, still very bearish. Still seeing a lot of big money betting to the downside in the millions. All right. So here's my Discord where I write all my plans and my commentary and trade ideas. And over here, pretty much the play or the plan is usually always the same. We look for calls. When a resistance clears, we look for puts. When a support fails, okay, I do have a process that I write about in my education section up here on how I do it personally, okay? And I write more, analysis throughout the day in real time to try to keep the group on the right side of the market, okay? But if I go to my 15-minute here, here's the 15-minute where I usually execute my trades. All my resistance and support level based on the weekly and the daily chart, but I like the 15-minute chart to execute my trades. Some people like 5 minutes, some people like 30 minutes. Depends on everybody. This is what I feel works best for me, okay? So this is the 9:30 candle right here, and SPY opened up clearing a resistance level, an intraday resistance level with this yellow trend line that I have here, connecting to a previous high back on June 28th in the morning. Connect to this one on June 30th around 145 candle, and then we broke out in the morning, okay? Pretty much because we were below the 380 level. The 380 level is based on my 38.2 retracement level from March 2020 low to January 2022 high, okay? So because of that, I was bear biased, so I didn't look for any calls, okay? That's just how I chose to trade. However, it did test that 380 level and reject it perfectly. Okay, you guys may recall in the previous video, I talked about as long as we're below 380, I would be bearish. But if SPY can recapture 380, I would, I'll switch sentiment to bullish, okay? Which we're going to talk about is happening here. But yeah, it was a strong instant rejection, all right? I saw that. That makes me feel like, it must be some market makers pushing it down. They've been really working hard. You can see here. They've been really working hard setting up that 380 zone as a tough resistance zone. Rejected perfectly, okay? But as I tell you guys, I don't like to buy direct. So in this case, I didn't enter puts direct off resistant. I look for the next leg. So if this was the first leg, I want to see it take out a support level, and that's where I would look to enter. Okay, so I saw it break down 378.5. It's a high risk play because I did not wait for the 15-minute candle to close. I did not use the back test and go strategy. I just bought the breakdown, entered around 378ish, and it worked out very well. Okay, level to level, I had a support zone around 375.5 to 376. I actually didn't take profit around there. I took profit to the next support level. The reason was I saw this big body red candle. It just looked like selling pressure was really strong despite coming into the support zone. So I felt because of this big body red candle that signified strong selling pressure and lack of buying pressure, I felt like this support zone was going to break. My hunch was right. There was no guarantee that it was going to work. My hunch was right, though. Took profits here, level to level, and just left a small runner. I only took one trade yesterday. Okay, only one trade. And as you can see, I missed a really big move to the upside where SPY ended up actually closing above and recapturing that 380 level. I missed this whole move. But in my opinion, as a trader, my job isn't to catch every move. My job is to catch a move or a piece of the move and make a profit and be done with the day while managing my risk, okay? In real time, okay? When we look in hindsight, we can say coulda, woulda, shoulda all day. But in real time is a whole different story. And I was very happy with my one trade. you know, I would less stress, I guess. Okay, so big story for today is the fact that SPY recaptured that 380 level. Now, if I zoom out a little bit to the 1 hour chart, the big pattern that I'm watching right now is this pretty decent sized bear flag. Okay, that's based on the blue lines that I got right here, right? Got this bear flag, SPY within this bear flag. If we zoom out more, okay, you can see it's coming down from a downtrend. And now we got this massive bear flag right there, okay? Let me take this out real quick, okay? So if I zoom back in, you can see that SPY had multiple touches off of these trend lines, okay? Right here, it started on June 13th, 12 noon candle. We touched there, that's 1, 2, 3, and 4. That's 4 touches, and on the support line, we got 3 touches. Start here. That's 1, 2, and 3. All right. Plus, we recaptured the 380 level, guys. It's looking short-term bullish. There's a chance that SPY can possibly go and fill the rest of this bear flag, which would, in theory, take it all the way up to around 398 to 399 zone, around there. Okay, 398 to 399 zone. But for that to even happen, what SPY bulls need to do, if you're a bull, SPY bulls need to do, what you want to see is the 380 level holding. This was a very critical level that served as a strong resistance zone all week. Okay, if you've been watching the intraday or if you've been watching the charts all week, you know that the market makers, they've been pushing. Anytime SPY touched that 380 level, they pushed it down very hard until power hour. I think it was power hour of yesterday. Okay, today's Saturday. Yes, it was Friday. All right. If you think the market's manipulated, you're most likely right. Okay, but 380 must hold. All right. If it drops below 380 and recaptures, I would look for calls. If it supports, if it tests 380, bounces, and then clear the next resistance around 382 or 383.5-ish, I would look for calls. And keep in mind, even though this bear flag is showing that it's possible it could get filled up to 398 to 399 zone, I'm still going to play it level to level, unbiasedly. All right? So, go to the daily chart here. This is a weekly chart, actually. Okay, so we talked about this bear flag, how the 380 level must hold. As long as it holds, I'm bullish. Okay, if it breaks back below with confirmation, that's a false breakout or a false recapture. That's bearish. All right, I will look for puts if the setup is there for for a false breakout or something. Okay, now going back to this weekly chart. All right, on the daily chart, recapturing that 380 level, that's a setup for a false breakdown scenario, which is bullish. However, when I look at this weekly chart, I'm seeing this dark cloud cover candle. All right, this is a dark cloud cover candle. We look here, it explains here on the dark cloud. This is on Pinterest, but it explains here what a dark cloud cover candle is. All right, definitely look it up. I'm looking here. I'm looking here on the weekly. It's looking like a dark cloud cover candle, which is usually a bearish reversal candle. All right. I'm not just going to turn bearish just because there's a dark cloud cover candle. All right. It needs to show me confirmation by taking out a critical support level, which at this point is 380. Okay. Just want to point that out and felt like it was worth mentioning. All right. So we're going to move on. Just remember that 380 level is critical. Above, stay bullish. Look for the next resistance to clear. 382, 383.5, 385, 387, and 390. All right? That's what the closest resistance level I got. Below 380, I'm going to switch back to bearish. 378.5, 375.5 to 376 zone. Then 373.5, 372. Those are my support levels below. Okay, guys, moving on to VIX. Big bodied candle to the downside. This is the daily chart, taking out this critical support level at 27.59. looking like it wants to break back below this white trend line. So if VIX can continue to stay bearish, maybe SPY can continue to stay bullish. All right, so the VIX need to stay below 27.59 to stay bearish. If it does recapture that, remember that could be a false breakdown setup. All right, triple Q, looking at the weekly dark cloud cover candle as well. Let me go down to the daily. It did recapture. I had a level here around 280. It did recapture that, but it ran right into my 282.3-ish resistant levels. Okay, so triple Q needs to clear that level to put 285 and then 286.5-ish and higher back in play. Above 286.5, I will have 290. All right, but if 280 fails, if triple Q fails to clear 282.3 and 280 fails, that's bearish. All right, that puts 277, 270 and 275 to 276 zone in play. Okay, guys, so bullish, it needs to clear 282.3. Bearish, it needs to fail 280. Dow Jones, also a dark cloud cover candle on the weekly chart. Go to the daily. You see that I had a bunch of bounces here around this support area around 305.5 and 303.6. All right, but it's around that zone where Dow Jones kept finding some buying pressure. Okay, so for me to believe this could be a higher low, it needs to clear that 312.38 resistant zone, which is the big level we lost back on June 28. If it clears that, I could favor more upside up to 319, maybe 320, 319, 320 zone. All right, but 305.5 is still support with 303.6 below that, and possibly another down to 298.7. I think we got a gap down there. Okay, guys, IWM looking like a dark cloud cover candle on the weekly chart as well. I'll go down to the daily. It did recapture a level though. It's a critical level around 170. 170 must hold to keep 174.35 in play. If IWM could clear that, could be a sign that this low right here was a higher low, and we could put 180.7 back in play. If 170 fails, switch back to bearish. And last but not least, here is Tesla. I got it inside this triangle pattern. All right, it did recapture the 680 level. Wasn't a strong recapture, but it still did. So 680 must hold to keep 700.5 in play. And if 700.5 clears, we could possibly go back and retest the resistant level of this triangle pattern. Is it triangle pattern? Yeah. That's up around 744.3-ish actually. Okay, so big move to the upside. We do have some resistance until then around 718-ish, 730-ish, 0.5, and then around 740 and then 744.5-ish. All right, but if 680 fails again and it actually gets a close again, the probability is a lot less of it recapturing. All right, so there's a chance it could drop down lower, down to 667, 656.5, possibly down to 648. I got another support around 639.6s, and then the support of the triangle pattern, which is around 629 to 630 zone. All right, guys, so that's what I have for you guys today. Thank you guys so much. Please, guys, remember, respect your stop losses. It's a very big deal that we respect our stop losses. It's something that a lot of retail traders struggle with, and it stops a lot of us from really being profitable in this market, okay? So remember to respect your stop loss, okay? Be a retail trader. Do not be a retail cuck. All right? You know what a cuck is? A retail cuck? A retail cuck, they'll sit there and watch the market makers screw their positions. They'll sit there and watch it, and they don't even do nothing, okay? Don't be a retail cuck. Be a retail trader. Peace.